Welcome back to the House Money Investing channel. In today's video, we're going to go over some price movements, some gains I made today in the market, as well as we're going to see how much money or how much principal I have in the market at the moment. And we're going to see how much profits I've taken out today. If you like this type of content, hit the like button, subscribe, hit that bell. I would really appreciate it. I do have 12 brokerages that I show 100% transparency in these on this channel. I show all my buys, my sells, my gains, my losses. I do analyze stocks 7 days a week, so I'm constantly giving out stock picks every day. And by the way, I will give out some in today's video. I forgot to mention that. And basically the strategy I'm using is what I call house money, is putting capital into the market, waiting a set number of days, pulling that capital out, and leaving only gains in the market. Started this challenge back in June. I've accumulated over $12,500 worth of free share. And speaking of free share, if you go down to the link below, you can go to Webull and get free 4 shares. 4 free shares. You can get a free share from Robinhood, $30 from M1 Finance, and a free share from moomoo. So let's get right into it. By the way, all the price moves that I show are stocks that I'm into, so they will actually be affecting my portfolios. So as you can see here, we got CRISPR hit its 52-week high today. Then in the stash account, my top holding is Baidu Inc. It's in a $45 investment that's now worth $88.16. So I've gained $43.16. It's up 95.91%. Then we got ARKG hit a 52-week high today. And then I got 3 dividend stocks that are simply too cheap to ignore. The first one we got is AVI, ticker ABBV. This is something I personally own myself. I'm up 19.29% in this position. This stock grows on average about, I would say, 19% a year. It's a nice growth stock, and also pays a very, very nice dividend of 4.20%. Very good, strong analyst ratings as well. And basically their increased encroachment in like blood cancers, should bode well for growth as pricing remains solid in the therapeutic area of the pharmaceutical market. AVI supports a strong dividend yield, which should act as a valuation support. As the cash flow supports the dividends look secure over the next few years. AbbVie's next generation immunology drugs target the IL-23 and JAK pathways, should help migrate the competitive threats facing herein. AbbVie has very great EPS, and as you should know by now, it is a pharmaceutical company. They basically do research in biopharmaceuticals, develop and sell pharmaceutical products, and it treats conditions such as chronic diseases, gastrology, dermatology, including blood cancers, hepatitis C virus, ACV, also HIV as well, Parkinson's disease, metabolism disease, all kinds of different things that this company does in the pharmaceutical world. And it's a very, very good company. It's something I hold long term. It's something I'm going to continue to swing trade to build my position in. The next very cheap dividend we got is BMY. This is something I just went over recently, so I'm not going to go too in depth on this stock. But it grows like almost 1% a year on average and pays a nice dividend of 2.8%, 84%. Very bullish analyst ratings on this company as well. Great EPS. And basically they engage in discovery, development, licensing, manufacturing, marketing, distribution, and sales of biopharmaceutical products. And then after that, the third one we got is VTRS. This is also something I hold long term. I'm currently down 2.5% in my position. This thing is a very, very new stock. Just started back in November, December of 2020. It's up almost 7% since it IPO'd. It's more of a growth stock, not a dividend play. It has great analyst ratings at a 53% buy, 47% hold. And as a global leading generic manufacturer, they enjoy economies of scale over smaller peers. The company's recent combination with Upjohn should provide improved leadership and opportunity to sustain steadier profitability. The development of complex generic drugs, including, insulins and all other kinds of stuff, should, spill growth for this pharmaceutical company. And they basically engage in the commercialization and manufacturing of pharmaceutical products. It offers its services such as diagnostics clinics, educational seminars, and digital tools. So another 3 great dividend pharmaceutical plays there. Then we got Tanger Outlet. This actually started back with their dividend yield. It's not a stock that I own, but it's something I'm steady keeping a watch on. Just because it's been dropping, pretty bad over the years. It has made a bounce back in the last 3 months. It is up 100%, so I'm gonna keep an eye on that. And I need to take a deeper dive into their balance sheets. The dividend yield is very intriguing, of 12.11%. It's got a 50% hold, 50% buy rating from 8 analysts. EPS look great. That dividend just worries me. That's why I got to look at their balance sheets. But basically, this is a fully integrated, self-administrated, and self-managed real estate investment trust. It focuses on developing, acquiring, owning, and operating, and managing outlet shopping centers. I personally shop at these shopping centers. I love to go to the Nike store. They always have great deals. But this is going to be a monthly dividend payer of 12%, and it is basically a REIT. So definitely something to take a look at. Keep it on your watch list. And like I said, I need to personally look at their balance sheets and see, what's been going on in the last 5 years and why they started making a bounce back the last 3 months. Next, we got Lucid and TC. They become the latest EV companies looking to go public. I'm very familiar with Churchill Capital. They're doing a merger with Lucid. This one is a very new IPO as well. Started back in like October of last year. It's already up almost 80%. And right now it's just still a blank check company, so we waiting on that merge. And pretty much the same thing with ACTC. So just put those on your watch list. Keep a watch out for them. If you're going to jump in one, I would probably recommend CCIV for sure. Then we got CGM was up today, 5.1%. Sun W was up 5.5%. IRBT was up 5.1%. And then I got 10 smart stocks to buy with $5,000. You got Google, which everybody knows Google is. Alphabet, major growth stock, pretty much running that sector of the industry. And then we got none other than Tesla, TSLA, EV company, number 1 valued car company in the world. Then you got Nvidia, ticker NVDA. All of these actually hold long term. Nvidia is actually a very good growth stock as well. It grows on average, believe it or not, about 300% a year. Very small dividend of 0.12. Very good analyst ratings. The firm has the first mover advantage in the autonomous driving market that could lead to widespread adoption of its Drive PX self-driving platform. The increasingly complexity of graphics processors provides a barrier to entry for most potential rivals, as it will be difficult to match Nvidia's large R&D budget. So yeah, great EPS. And basically they engage in the design and manufacture of computer graphic processors, chipsets, and related multimedia softwares. So great play into the EV. They just actually did a partnership with, I believe it was Neo, I want to say. It's slipping my mind right now. Then we got Sivb. This here is a financial company. Financial sector is very hot right now. This one grows on average about 60% a year, close to 70. Very good analyst ratings. SBB is sensitive to short-term interest rates, and a rise in interest rates would greatly benefit net interest margin. The company has warrants on almost 1,700 companies, providing the seeds for the future investment gains. Capital calls lines of credit are high-quality loans and means of growth for the company. Pretty good EPS as well. This is a banking company. And basically it's a holding company which engages in the provision of banking and financial services. Then we got Roku. Roku's a streaming platform. Roku's also something I hold long term as well. I'm currently up 25.85% in my position in Roku. And Google, just to go back real quick, I'm actually down 2.60% in the Class C. And in the Class A, I am down 2.77%, which I'm not worried about it. Google's going to, it's going to run up. So, and Tesla, I'm up 191.38%. So doing very good in Tesla. Then we got Berkshire Hathaway, BRK. Both of these are ones I hold long term. And this is a hedge fund that's managed by Warren Buffett, which everybody should know about, Berkshire Hathaway. Then we got Dollar General, retail store. A very good play here. Usually grows about 18% a year. Very small dividend. Great analyst ratings. With this store is considered an essential consumables heavy lineup to capture trade down sales. Dollar General should step aside the COVID-19 pandemic's adverse economic consequences for much of the retail. Dollar General capitalizes on a broad network of stores, which include royal locations that are often the only convenient, sizable retailer. Lowest price points and average ticket sizes protect the dollar store segment from digital intrusion, as shipping costs are difficult to absorb, all while allowing firms to sell smaller package sizes at higher margins. Very good EPSs for dollar store. And basically it's a merchandise store. It offers includes like food, snacks, health and beauty aids, cleaning supplies, basic apparel, housewares, and seasonal items. It has like Clorox, Energizer, Procter & Gamble, sells Hanes, Coca-Cola, Mars, Unilever, Nestle, Kimberly-Clark, Kellogg's, General Mills, and Pepsi. So they sell a lot of the name brands as well. Then we got a good old Apple, which Apple's dominating, clearly. I'm only up 3.31% in Apple, but Apple is a great growth stock. It grows about 80% a year, and they're just capitalizing on the. They're basically, they own the phone market. To be honest with you, then you got WSM. This is also something I own long term. I'm up 32.35%. This one grows on average about 25% a year. So nice growth stock. Nice small dividend as well, 1.64. Very good analyst holdings as well. And more than half of its revenue stems from direct consumer channels. This helps minimize the expenses of brick and mortar footprint and maximize operation firms. The fund opened its first company-owned stores abroad in Australia in 2013 and has expanded to the UK. International opportunities could provide location and sales growth and improve brand awareness. They have great EPS as well. And this is it basically engages in retailing of home products. So, yeah, nice play. Something you also want to put your money into if you got the $5,000. Then you got THO, another one that I hold long term. I'm up 16.93% in this position. Usually grows about 10% a year, so I'm doing very, very well. Super low PE ratio, nice dividend of 1.57%, great analyst ratings, great EPS. And this, they engage in manufacturing sales of recreational vehicles. It operates, in North America and Europe, basically. So yeah, if you got $5,000, I would recommend these 10 stocks to go ahead and invest in for your best benefit. Then we got IBKR. This is Interactive Brokers. This company here grows typically about 17% a year or so. Nice PE ratio, small dividend of 0.57%. Great analyst ratings, great EPS as well. And it operates as an investment holding company which engages in broker or dealer and proprietary trading businesses. So nice financial play here. Then we got another financial play, which these are just some of these are companies, the ones that I recommended already, like this one here, WMS. I'm just adding these to my stock list basically. Then we got X1 up 5%, MaxR up 5%, and now we're gonna take a look at some of my brokerages. Of course they're down today, but we're just gonna take a look at all of them anyway that I have for the house money. This is the Webull. It's valued at $2,091.28. It's up $329, up 18.67%. So it's doing pretty well. Top holding Spotify, got one share at $261.40. It's now valued at $320.56. It is up 22.63%. Total profit of $59.16. So doing pretty decent, about 2 times the average of the market here in the Webull portfolio. Then in the stash portfolio, we got a value of $3,581.51. The Acorns portfolio is valued at $2,057.61. The Cash App portfolio is valued at $2,648.93. It is up $641.54. Total percent gain of 13.61%. We got Bitcoin in the Cash App valued at $1,915.50. This is a $327 investment that has grown to over $1,900. Then the public account, we got $3,109.88. It is up $482.70. Total percent gain of 18.37%. I got $2,825.17 invested in stocks. A cash balance or buying power of $284.76. Then the moomoo account, or Momo, however you want to call it, is valued at $1,059.18. Market value is $1,479.35. My buying power is $332.82. It was down today. My top holding is BP. It is up $14.07, up 40.74%. Then this is a Charles Schwab account valued at $1,427.25. Today's gains were $637.96, up a total percent of 80.83%. Then the Ameritrade account is valued at $1,749.72. Today's gains were $255.51, up 17.10%. Oh, I'm sorry, that's all time. No, that's today's. Okay. Top holding is AJR. It's up $19.52, up 22.81%. Then we have the Fidelity account valued at $1,838.25. It was down a little bit today. Then we got the Vanguard account valued at $1,288.21. Then we got the M1 Finance account valued at $1,740.86. It is up $277.27. Total percent gain of 34.08. Top holding is CGC, Canopy Growth Corporation. It's up $28.38. Total percent gain of 29.98%. It's 7% of my portfolio and is valued at $123.04. Then we got the Robinhood account valued at $6,215.98. It is up $1,572.10. Total percent gain of 33.85%. Buying power is $480.17. This is another account of mine. It's valued at $10,678.57. It was up $638 today, up 6.35%. Then we have the eToro account valued at $180.33. Profits of $86.33. We got a $47 investment in Bitcoin we made back in September when Bitcoin's around $11,700. At the moment, it's up over $35,000. So our profit is $93.98. That $47 is now worth $140. Then we made some transfers. This is out of the Ameritrade account, I believe. We took up some profits out of $438.31. Then we took $37.61 out of the Vanguard account. Then we took $237.67 out of the Webull account. Took $240.33 out of the Cash App account. So that'll sum up the video. That's all my, my gains, all my 12 portfolios that I show here on the channel, as well as some profits taken, some nice little stock picks for you guys and price movements. Once again, if you like this video, hit the like button for me. Please subscribe, hit that bell, as I will bring you more content. Thank you for tuning in.